real estate report for July 2014, brought to you by the Remax YourOrlando.com team. We had another interesting month in the Orlando real estate market. Again, let me share this slide with you guys. You guys let me know if you guys can see this slide okay, please.
Sure.
You guys see that? Is that full screen?
Mm-hmm. Yeah. Yep.
Okay, great. Yeah, this month we had the inventory increased again. Last month, or I should say in May, because we're looking back, we had 12,733 listings, and then in June we jumped up to 12,974. Okay, you guys don't see the numbers on the bar, but trust me, it was in May it was 12,733. So since like April, May here, can you guys see my cursor?
Yeah.
Okay. Yeah, right here you see, that's when the inventory started increasing, and we've had an increase, ever since. So moving on to, and if you look back, here's over the past 3 years, so to give you an idea of where we've come from. Like June 2012, we had 9,483, and then last year we dipped down to 8,484, and now we're all the way back up to the highs of certainly the past 3 years. You guys see that? Okay.
Yeah.
Mm-hmm.
Wow.
Yeah.
So inventory is certainly building. So that's good news for buyers for sure. But the median home price, continues to rise. I mean, if you go back to 2012, you guys seeing that slide? Okay, the green one.
Yeah.
Yes.
Yeah. I mean, if you look at that, we were, a couple years ago we were at 125, then we went up to 152, and now we're at 166. So the numbers are going up. So it kind of doesn't work like what you'd learn in economics class. You think more inventory, the price goes down, but something something here is going against that. Okay, and then pending home sales. A couple years ago, back in 2012, we had 11,730. Last year, we went down to 9,910, and now this year we're at 882.02. So not as many pending home sales, or not as many pending deals right now. And then solds. This was really interesting this month. So this month we had 3,262 closings, and that's actually over last year. So that was really interesting, because our pendings were down, but but we still saw more closings. So the numbers over the next few months are really going to be interesting to kind of see how all this stuff plays out. So so I'm going to go around the room and just see what your guys' thoughts are on the numbers. So let me started with Alex last month. James, let me introduce James here. James is our mortgage expert extraordinaire. And so James, why don't you tell us a little bit about what's going on in the mortgage? And then I have a question that I keep getting asked, but I'll ask you that later. But let's just give a little update on what's going on the mortgage side.
Yeah, Phil, thank you. It's actually really interesting, just the points you've hit on, because it's true, the volume, or I'm sorry, the price of the homes keeps increasing, and there's more homes on the market, so it's just hard to fathom how these are working hand in hand. We're starting to see hitting this volume levels of last year with less units. So in a sense, we're doing a lot of different loans, and we're hitting numbers we hit with a lot less properties. So I'm not sure what is causing that. I'm not sure why there's an increase in inventory. It could be the quality of the homes, like we discussed in our last our last webisode. So it's just we're seeing a lot of investors rehab, and it's just continuing to go that route. But what we are seeing is an increase in refis and reverse mortgages, and less people depending on HARP because they're starting to have more equity in their homes.
Mhm. Right, right. So, you're seeing more investors, right? And we talked about that before we got started. There's really no statistical information that you have on that. It's just kind of like what you're seeing, like in your uh, I'm sorry, I had the phone ring there. I'm gonna turn that off. But
No.
Business calls.
yeah, yeah. So you wanna pick up on that? Just as far as like what your thoughts are on that, and if there's any like statistical things that we can maybe look at like going forward, just to see if there's like a like a mix, because I know, what was it, a couple years ago we had that real big investor push that kind of launched everything, and really caused a lot of competition for the listings that we had. Um, are you thinking that maybe that's that second wave of that is coming along?
There's a good possibility of it because the houses are increasing and people are so far only able to qualify for a certain amount or comfortable with a certain monthly payment. It's leaving the few houses that are in, let's say, the 80 to 150,000 range in a highly competitive just area. So you're going to see multiple contracts on that. Just from our side, we're seeing borrowers looking for that they have to increase their price range to get the home that they want.
Mm-hmm.
So I don't doubt that most of them are just investors. A lot of them because they're losing out to cash deals, which most of them are either investors who are trying to rehab the home and get it to a place where they're flipping them for maybe $70,000 to $100,000 profit for the most part, and the market is catching up to it, where it's a surprising increase.
Mm-hmm.
Where it would be at.
Gotcha.
So you'll find the undervalued homes are going a lot quicker than coming back on the market for market value, which is seemingly higher.
So what you're saying is you think that there might be a situation where the lower, more affordable properties are maybe what's flying off the shelf, and some of the higher end stuff is just kind of sitting there.
I'd have to agree. There's some homes, that they're not going to get the multiple offers. There might be fewer borrowers who are looking for that or are willing to pay that for it.
Mm-hmm.
So that's kind of what we're seeing on our side, essentially. So you'll see less offers on the 300,000 and up homes, 500,000 even less. So I'm not sure if people are just waiting it out or the prices have just gone to the point where they're just not as interested in spending that much to get that quality home. So, I mean, but that would be just a little bit of what we're seeing. I don't know if it's a trend or not.
Gotcha. Well, we'll have to look at some of those numbers, because that's interesting. Didn't really think about that, but there might be something to that, because it's just something's just not right with the numbers, because we see more inventory, we see more closings, we see a lot of I guess anomalies out there. So
yeah,
we'll dig into this stuff, but let's see what Alex has to add to this. So Alex, our listing extraordinaire, listing agent extraordinaire.
Thank you.
Hey, Alex, why don't you kind of give us the listing perspective on this?
Sure. Obviously, it kind of seems like there's a give and take right now between the median home price going up. I think this is the 6th month in a row now, and then the monthly inventory of homes has gone up as well to a ratio. I believe it's 3.98, and last month it was 3.84. So it's gone up. I mean, that's a considerable jump in a 1 month time. That being said, like I touched on last month, it seems like it's kind of moving slightly like towards that more balanced market of the 5 to 6 month period, which is, I know Phil and I were in a class not that long ago at Aura, always trying to learn more. And in there they talked about the 5 to 6 month period being that balanced market. So it's interesting, just to touch on what you guys were speaking about, that there's more supply. We're almost up to 13,000 homes on the market, which is, that's a lot of homes, obviously. And some more are going to closing, but it looks like, just a given fact that the interest rate's still low. I think it's 4.14 for the 30-year, and you're talking about what was the other point? It was second, how the home price obviously went up as well. So it seems like there's a give and take there, and some of it may be inflation that's helping sellers to boost that home selling price up. That being said, it doesn't seem like there's really anybody that's not afraid to put their house on the market right now. If they're even kind of thinking about it, for what it's worth, I drove by a home on Sunday night, in Maitland area here, very nice home, and somebody was there just putting up their for sale by owner. So people are still trying to get, still putting their feet in there, testing the waters, seeing, hot, cold, getting any bites on their homes. So, we just in the last week or two, we've listed a few homes ourselves, here at the YourOrlando.com team. So that's kind of my general overview of how things are going right now. Hey, Phil, can you hear me? I don't think I can hear you.
Can you hear me now?
Yeah.
Good. Yeah.
Okay, not sure what happened there. But
Gotcha.
yeah, good stuff, Alex. And yeah, interesting thing. We're taking listings. The inventory is picking up, but there is that buyer activity is just something to keep an eye on. But did want to where's my charts?
And to consider, just to touch on what you guys talked about earlier again, I think June 2013 it was 8,500, and now we're almost at 13,000. That's that's quite a considerable jump for a 1 year period.
Are you guys seeing my charts okay now, or are they like small screen?
Don't see the charts. See
your MLS.
Okay, I'm not sure.
Maybe minimize that. I'm not sure.
Yeah, one of these days we'll get this thing figured out. Okay, how about now? Still the MLS?
Just yourself. Looks like.
Okay.
Yeah, I don't believe the. I haven't seen.
How about now?
Yes.
All right.
Yeah.
Yeah. So going back to the charts, yeah. The inventory and Alex, I think you just mentioned something about June numbers. You were talking about that. Here they are. This is what I was trying to get to kind of reaffirm your point.
Thank you.
And so you were talking about the June over June right here.
Yeah.
So yeah, what was your point on that? Just going up, right?
To reiterate, I know you guys have touched on it, but for a 1 year period to have that jump in homes active, on the market for sale, it's just I don't think you can't see anything even in the last 5 months, 6 months, that's even close to that. Obviously, we're talking about the busy months. We're getting, I guess, towards the waning days of summer, but people are still out there, and they're still, they're trying to sell their homes. There's no question about it. Met with somebody on Friday, here we are on Tuesday morning, and they're ready to still put their home on the market on, beginning of August, which is, you in summer you want to do it as fast as possible, of course, to take advantage of that busy season. But people are still ready to do it. Yeah.
So
it's an active time.
Yeah. So let me get out of this screen share. Yeah. Hey, I'm back on screen now, right?
Yep.
Yeah.
Okay. Hey, James, we talked about this, a couple times, last week and at our uh, company meeting and stuff. And I don't know why I'm getting this question, but I'm just, I guess people are like eager to get back in the market and buy a home, after their uh, financial issues where they had to, either foreclose or, bankrupt or, at least short sale, their house. So getting a lot of questions like, hey, has that changed? Has that changed? What's the deal? So when, can you just like, help us out and kind of tell us, what people need to do, what they need to think about to get ready to get back in the home buying, market and situation, post, I guess, financial, catastrophe.
Yeah, absolutely. And we've actually seen a lot of it. Just when the market crashed, everybody was affected by it. So people were, either they lost their jobs or, they had. There's so many different things: increased medical, increased obligations, and so a lot of people went the route of foreclosure, deed in lieu, short sale, bankruptcy. So a lot of times there are these set guidelines, but you're seeing that a lot of people, or the government's lessening the guidelines a bit more and more. I'm actually going to show you guys just a quick timeline summary, and this one's from Fannie Mae. Freddie Mac is very similar. Can you guys see that?
Yeah, I got it full screen. Perfect.
Okay, perfect. Okay, so this one is, we'll start with bankruptcy. Now the thing is, this is the bare minimum that Fannie Mae will accept, which doesn't mean much because investors and lenders have their own overlays that they put on top of these. So sometimes it might say, like for FHA, for example, there's no minimum credit score requirement. But if you go to a bank or a lender, they'll say, oh, we could go down to 580, or they'll do 620, 640. So even though the government says, hey, we'll take it as long as you underwrite it, the problem is the reason it's risk-based is because nobody wants to end up buying back that loan. Because if they buy back that loan, that affects their bottom line. It could put them out of business, essentially. So just back to the chart here, bankruptcy, Chapter 7 or 11, it's a 4-year waiting period for Fannie Mae. And if you have an extenuating circumstance, which is something that you can prove is not going to happen again, it's a one-time thing, then they may make an exception for 2 years. Chapter 13, it's restructuring. It's very similar. If you've had multiple bankruptcy filings, and I'll make this available for download on the Google Hangout,
Okay.
so that clients can review it. Foreclosure, 7 years, 3 years with extenuating, and then deed in lieu and pre-foreclosure. These are pretty much, you can call pre-foreclosure, it's essentially a short sale. And if you put 20% down in 2 years, you can get a loan. The reason they put 20% down is to avoid MI companies, because no MI company is going to insure after they pretty much, when the market crashed, they ate a lot of the, they went out of business, most of them. They had to eat the difference and cover it.
Right.
So here's what people want to see. After bankruptcy, after foreclosure, after anything, they want you to reestablish credit. A lot of people that we've seen, a lot of clients would say, oh, credit cards got me in trouble. I don't want to have another credit card. I don't want any more debt. I'm paying everything cash. That's not what investors want to see. That's not what lenders want to see. They want to see that you're able to manage things responsibly and to get back on your feet. If credit cards got you in trouble, they want to see you pretty much face the beast and get back in there and act more responsible with it. Even if things are out of your control, we completely understand. It's just about, they want to see that, hey, you've had a history of getting it back on track. So after bankruptcy, they're going to want to see a rental history, a housing history, that you've made a monthly mortgage payment, and they're going to want to see typically 3 trade lines for at least 2 years. That, hey, after the bankruptcy, and a lot of people say, well, I haven't been able to get a credit card because of the bankruptcy or because of my short sale or anything. So what you want to look into doing is getting a secure credit card, which is pretty much you put money at a bank and you pull money off of that. So a lot of local banks offer that, and that's a way to reestablish credit. Even if you definitely don't max out your card. You know, a lot of people will tell you, oh, keep a balance on it. You don't have to keep a balance. You just have to keep it active. Even if you buy a cup of coffee, you know, and then pay it off, just keep that card active. The way I always describe it to clients who experience a hardship is, imagine you're in a wagon and you've got horses pulling that wagon. So you've just had a financial distress, and if you don't have any horses, which are going to be credit cards, you know, just small things to pull you away from that distress, your credit score is not going anywhere. So you have to reestablish credit in order to purchase again. You know, as scary as it may seem, or you don't want to get involved in it, it's just pacing yourself and getting on the right track with that. FHA has similar guidelines. They actually have a 2-year wait, and they won't do less than 2 years unless, you know, they won't do less than 12 months, sorry, unless you can prove extenuating circumstances. There it is again. Are you guys able to see that, the little text pop?
Yes, perfect. Yeah.
Everything is always about extenuating circumstances. As a lot of people know, FHA Back to Work was released a few months ago, and so far it hasn't been as successful as everyone's hoping. It's because everybody's afraid. Just speaking candidly, investors are afraid that FHA won't back the loan, so they look at the guidelines for it. You know, the reestablishment of credit, the 20% decrease in income. They look at every single thing, and they say, okay, is this going to be something where I'm going to end up stuck with this loan for 3 years, you know, or 2 years, however long, you know, after somebody has this economic event. So they have these guidelines they have to meet. So a lot of it's pretty subjective right now. It's like when HARP came out, you know, they were saying Fannie and Freddie are going to back these loans. You know, go ahead and underwrite them, and you know, we'll back them, guaranteed. Everybody was still afraid to do it, so they would put limits. Okay, we'll do 105%. I don't know if anyone's home affordable refi program. So it's where your house is underwater and you can refinance it. So everybody was worried about it, so they put a limit of your house has to be underwater 105% LTV, 125, and then after 6 or so months, almost 12 months, they went to unlimited and they started seeing that it works. So I'm starting to see that FHA Back to Work may work, but just not at this time. They haven't fine-tuned it or felt comfortable enough in underwriting it.
Okay, man, that's a good overview of what's going on. So I'm going to point people to this the video. Definitely. The next time we get questions on it, because we get questions on this just all the time. People calling in, hey, you know, I had this situation. You know, when can I get back on the horse? So with there was a lot of information there, you know, James. So I'm sure people are going to have a lot of follow-up questions and stuff like that. So we want to get all this stuff linked to the site and maybe you know, cross-link over to your site with some information. But it kind of sounds like, you know, some stuff needs to happen, you know, prior to that 2-year period. Yeah. And probably be a good idea for these people to get in touch with you and kind of get into you know, into like a repair cycle, you know, with somebody that can really help them, you know, get things back online. So you know, so do you have I'm sure you have a program where you can, you know, get people lined up so they're ready, you know, so as soon as that 2-year mark hits, I mean, they've done all the things that they need to be ready to launch there. But in addition to that, you know, getting them ready for that point, all this stuff is subject to change. And you know, with that being said, if they're in your loop, in your, you know, in your circle, you know, you can not only help them, you know, repair their credit and get prepared, but you can also, you know, make them aware of, you know, any change that may make them eligible to purchase sooner. Is that correct?
Yes, that's correct, Phil. Actually, I wanted to touch on that because a lot of people are probably wondering, when does the timeline start? So for a bankruptcy, it's when your bankruptcy was discharged. So let's say you file your paperwork in June and your discharge was in August. It would be from August you'd have the waiting period. Now, speaking of lessening guidelines, what people don't know is that even though you filed bankruptcy and you walked away from your house, you moved in, you started renting, a lot of the things we've seen over the past couple of years is they won't take the timeline from the discharge. They're going to take the timeline from when your house changed hands. So when the bank finally takes over your house, that's when the waiting period starts. What we've seen with a couple of our investors is they're willing to go off directly the discharge date. So, and as you've seen how long it takes to foreclose on a property, we've had a client who had a bankruptcy, moved out of his house, did everything the exact right way, and the bank didn't take over the house for 3 years. So the timeline started at that 3-year period. We were able to get an exception if in his bankruptcy paperwork he was able to show that the house was surrendered. So if it doesn't say surrendered in your bankruptcy paperwork, you're not able to try to get that exception.
Gotcha. So the long and short of it, if they, somebody is looking to buy in the near future, they don't necessarily want to wait till that 2 years and then reach out to an expert like yourself. I mean, they want to get in touch with you, sooner rather than later, so you can help them plot a course and and get them back on track, because it just all this stuff is like secondhand to you, and it's like but you're one of the true professionals in the industry, so they probably just need to reach out to you, because there's just so much to wrap your head around. There's just a lot to know there. But that's why they that's why there's people like you out there, to get them on the right track. But hey, I want to Brendan, can you speak a little bit on the buyer side? Can you help us out there?
Yeah, we it's been, quite honestly, extremely busy since last time we sat down. And
that's Alex and I were working till Alex and I were working till wee hours in the morning. I know the whole team has just been we've been run ragged.
I mean, give you an idea. Had put together 5 offers in the past 48 hours.
Wow.
And I'm a little tired. I'm sorry it's late. Just a little tired.
Yeah, we were all like just burning the midnight oil.
Yeah. But it's kind of interesting out there, because it's interesting how different sections of Orlando are doing different things right now. Give you an example, the Lake Nona area. They're still trying to push the prices down there, where everything is still holding pretty close to asking price. Whereas if you're going into certain sections of Apopka, downtown areas, you're seeing where the prices have been pushed too much, and prices are starting to drop a little bit. I know one of the things that I look at every morning is the number of price decreases on in our MLS system, and that has jumped quite a bit.
Really, that's something I have to look at, because we're well, I don't want to get into too much detail, but where's that in the MLS?
When we open up our homepage on MLS, give me a second. Let me pull it up.
Yeah. Just share it with us, because that's good information. So, and that's something I've been looking for a while with our build and inventory. Why are our prices still going up? And I'm sure it's to a large extent inflation based, but I do want to keep an eye on that.
Yeah, I mean it's one of the nice things is I just go in there and I look.
And this isn't ML Exchange.
This is yes, it is. It's in the it's what's nice. It's right on the front page. It gives you all that information.
Yeah, share it with us real quick. But hey, we do have to wrap up. We're actually running slightly over already.
So
make some quick points, and then we gotta you know.
I apologize because we're streaming the system running slow. But same thing's happening that was happening last month. If the houses are mint condition, move-in ready, we've gotten into multiple offer situations still.
Mm-hmm.
Just because, again, like we discussed last month, the quality of homes isn't that high. We actually, one of the ones we made an offer on this weekend had 4 offers on it within 24 hours.
Hey, Brendan, quick question, because some of the stuff came up earlier. I think James mentioned it, like price points at different, or I guess, is it somebody like shifting like stuff there? Got some noise in the background.
Is that they have.
They
have like these little like circle areas.
Hey.
Rapid.
Here, it's picking up everything here.
Hold on, Sean. The conference room is booked, dude.
Hey, Brendan, but
I'm trying to talk as low as possible. Hey, Sean.
we got some interference in the background. We got somebody in there, I think, with Alex. But James was mentioning that I guess there's more activity at certain price points. So, are you noticing like the same amount of of energy or in the lower end market or the higher end market? Because we're kind of our theory was that there's a lot of desire for the lower end properties. I guess under 300,000, and then it kind of tapers off as you go up. Are you seeing any of that? I mean,
I would agree. I would agree with that wholeheartedly.
Okay.
I'd actually probably drop it to about 250 and below. Because that seems when you James, when you do a person's income, that seems to be like kind of like a breaking point. Where even a 2-income family with a couple of cars, some credit card debt, that seems to be where a lot of people are comfortable right now. There's been under that 150 mark, it's still going nuts, and the quality of the homes are just they're not very good, but people are trying, people are pushing the values on these. Give you a perfect example. We looked at several townhomes that are identical in the Lake Nona area, and the most recent sales were at the 160, and we had 2 sellers who just wouldn't drop off of 180. Wouldn't do it, and they felt like they could push the market that high, and I just see it's coming to a point where it's going to break back to a buyer's market. I really think within the next month or two, when we look at that morning number of properties that have decreased, we're going to start seeing that increase even more. I really think so.
Yeah. Well, hey, we do have to wrap it up, so I hate to cut you off, but we're actually over. So just gonna go around. Just want everybody to say their goodbyes and then final thoughts. If you guys could do that in a minute, and because we've gotta wrap it up and get on with our day. So any final thoughts? Anybody ready to go first? Alex, James.
Yeah.
Okay.
I'll go first. If it's okay, I'm just going to put my contact info, so if anybody has any questions whatsoever, they could always, I don't know if you guys are able to see it, but they could call or text me on this number right here, the 407-970-8175. Email me, james@sgfloans.com. And Phil, it's exactly like you said. Whether you're done with the bankruptcy, foreclosure, or anything, you definitely want to start right away. You don't want to wait till the end of the waiting period because you don't want to add more time to it. You might as well get on the right track now. And then there are lessening requirements, and there might be an option earlier, but you want to get on the right track now.
Yeah, thanks so much, James. And yeah, if you guys, in case I forget to tell you later, please, send me some show notes with your contact information and like, a little bit of a summary of what you talked about. But thanks so much, James, for all the good information. We want to get that out to everybody, so I want to get copies of that as well. Alex, what are your closing thoughts?
Sure, yeah. I just want to kind of come full circle on a few of the things that were discussed here today. Interesting points earlier about the investors and how it seems like, as things are trending towards a buyer's market, the balanced market, because we're just that shade under 4 months. What I've noticed, and I have a close friend who works with investors all the time, those homes that are in that affordable range, a lot of them are getting snatched up cash, and here you are, a home buyer, and you have to obviously, if you have a bankruptcy or any sort of financial distress that you had to deal with, you're having to make all these, show your rental history, reestablish credit. So it's very interesting how the homes that are available that are in an somewhat affordable, that median home price range, like even Brendan talked about in Lake Nona, they're getting snatched up sometimes by, investors, whether it's, maybe not the most desirable of areas or not. So it's just very telling, I think, where we're going in the future, from both a seller standpoint on my end as a listing manager, as well as the buyer end. So it's a lot of, it seems like, too, localized price differences from what we're seeing, as far as some prices are, you'd think the prices would be trending down, but even with taking into account the inflation, which we think is there, some of the prices seem to be holding up pretty well in desirable areas, if not even higher.
Yeah, good stuff, Alex, for sure. And Brendan, we'll give you the last minute here to give us your thoughts.
Sure.
But I would like to give you just a little extra, maybe 30 seconds to talk about. You mentioned the competitive environment for the lower end stuff, and especially in Lake Nona. But what about as you go up the ladder to the over 300? Because I know you're working with some of those people as well. There's not as much competition there, right? So can you, in addition to wrapping up, can you just finish up on that point?
Yeah. On the higher end, there isn't as much competition. You've got a little bit more time to do your due diligence, to make sure that the offers that you're making are solid offers. But they are also, some areas are still trying to push the prices and hold the prices. But one of the things we're looking at when we're making offers now is days on market, because people had gotten into a feeling that, oh, if I put my house on the market, it's going to sell within 30 days. And you're starting to see those, like Alex said, you're starting to see that inventory time increase. And when the inventory time starts to increase, you can tell when the sellers are starting to get a little bit nervous. And that's when you look in and you start seeing, in certain areas where the prices are starting to drop. Even though there may not be too many homes because they've sat so long, and they were initially, overvalued, or overpriced, truly. The sellers are starting to get a little bit nervous. Perfect example is in Stony Brook, where we're working with a client who's looking to upgrade, and the home that we're looking at really is probably $30,000 overvalued. And working with our buyers, we can show them, through comparable sales, that hey, this is when we do our adjustments, looking at everything else that's sold within the past couple months, even that it's not there. And sometimes it's really hard for buyers to kind of sit on their hands. One thing I was always taught in negotiation: the person who speaks first loses. and you have to prepare your buyers for that. And that sometimes, guys, I know it's hard, but sit on your hands. Don't say anything. They're going to call you back. And what happened yesterday? Listing agent called me back. Oh, how's it going? Oh, are they ready yet? And you can tell she's getting nervous because people, again, they've been used over the past year and a half, stuff flying off the shelves, and it's that time period's slowing down. So it's starting to trend. I think especially after school starts, when a lot of families aren't going to want to move, I think you're really going to start seeing it move more towards that buyer's market.
Gotcha. Well, hey, that's great stuff, Brendan, and everybody, and James. Special thanks to you. We really dug into some mortgage issues this month, and because that was the questions that came up this month, or that I received the most inquiries on. So I want to invite our our audience to comment in the in the comments section. Basically, let us know what you want us to talk about, and we'll dig into those issues, and for our August Orlando real estate report. But for now, that's going to be about it. Just want to thank everybody for their contribution, and thanks to our viewers, and we look forward to seeing you next month. Everybody say bye.
So long.
See you guys.
Thank you, guys.
Happy buying, happy selling.
And we'll see you guys next month. Thanks again, everybody.
Bye.
Take care.